Hello, babe. What's up? Any news?
Yes, so they reduced the fee for that project management course from 100k to 20k. But we need to pay today to take advantage of the price slash. I'm about to make my own payment too.
Oh, wow. So the deal is just for today?
Yes. I've asked you to send me your own money, but anybody that knows you knows that you are Mama Investments. All your money is probably in investments, and they will take like 1 million days for you to withdraw and send to me.
Mama Investments. Hey, girl has to make more money. And AXA Mansard Investment gives me all of that. Anyway, I have sent my own money. Just go and make your own payment too.
Wait, what? Now? Should you said all your money is in investments?
Yup. With my AXA Mansard Money Market Fund account, I can do transactions fast and earn on the go. And if I want to invest in other portfolios, I do not have to leave my AXA Mansard platform. They offer me a one-stop shop that gives me a wide range of investment options. That's why I'm called my investment now.
Transact, earn, go with AXA Mansard Investments. Visit www.axamansard.com/investments or dial *987*2# to get started today.
Hello, babe. What's up? Any news?
Yes, so they reduced the fee for that project management course from 100k to 20k. But we need to pay today to take advantage of the price slash. I'm about to make my own payment too.
Oh, wow. So the deal is just for today?
Yes. I've asked you to send me your own money, but anybody that knows you knows that you are Mama Investments. All your money is probably in investments, and they will take like 1 million days for you to withdraw and send to me.
Mama Investments. Hey, girl has to make more money. And AXA Mansard Investment gives me all of that. Anyway, I have sent my own money. Just go and make your own payment too.
Wait, what? Now? Should you said all your money is in investments?
Yup. With my AXA Mansard Money Market Fund account, I can do transactions fast and earn on the go. And if I want to invest in other portfolios, I do not have to leave my AXA Mansard platform. They offer me a one-stop shop that gives me a wide range of investment options. That's why I'm called my investment now.
Transact, earn, go with AXA Mansard Investments. Visit www.axamansard.com/investments or dial *987*2# to get started today.
Okay, good afternoon, everyone. I see we already have quite a number of attendees on the call. Let me know if you can see me. Let me know if you can hear me. Let me know if you can see me. Victoria Olisa. Let me know if you can still see me or hear me. You can just unmute quickly and let me know that you can see and hear me.
Yeah, hi, MEC. You are audible and we can see you.
Fantastic. Thank you so much. So I believe that our people, our attendees can also see and hear me as well. Once again, welcome to the session. This is the 4th edition of the Achieve Much More webinar. We have done this twice. We've done this 3 times, and you're welcome again to another edition where we're going to talk about strategic money moves for the second half of the year. So we're how many days into the second half of the year now? I think about 12 days. We still have enough time to either improve on the great things that we've been doing from the beginning of the year or make corrections and move ahead. So let's dive into it real quick. Please, your internet connection, get it ready. Make sure that you don't miss anything because there's going to be a lot of valuable nuggets that are going to be shared today. Microphones and cameras are to be off throughout the presentations so that we're not distracted, so that we don't distract other people, so that everybody can be able to learn and so that we can take down our questions. And that takes me to the next ground rule, which is we're going to be having a Q&A session after the presentation. So you don't have to worry. There will be time for us to take your question. You can use the chat section to drop your comments, your questions, etc., and they will all be attended to after the presentation. So, not to waste our time, to jump straight into the meat of the matter, we have our guest speaker, Olisadwalima Elumelu. I'm sorry if I butchered that name, but he is a colleague of mine and he's going to be taking us through today's presentation. Olisa is a seasoned investments professional with over half a decade of experience in the Nigerian financial markets. So you are rest assured that he knows what he's talking about. He's an associate member of CISI, Chartered Institute of Securities and Investments, and he holds a BSc in Industrial and Production Engineering from University of Ibadan. He claims it is fondly known as the first and the best. I mean, I don't know about that, honestly. Olisa has shared that his interest in finance was sparked by observing how skeptical the average Nigerian is about investing. I mean, that's because there is a lot of scams and a lot of people don't understand the financial market. So he's passionate about sharing what he knows and making it easier for the rest of us. When he joined AXA Mansard, he started in the sales team, and over the years, he has grown with the team, and he has become as the team has evolved into a full-fledged advisory unit, which is now under his leadership. He has actively nurtured his passion in finance by pursuing certifications within the industry and has also developed his skills in macroeconomic research, sales, mathematics, and client advisory. These have enabled him to engage effectively with clients across all investment categories. Beyond his role within AXA Mansard and as a professional, he volunteers to teach financial topics at public forums, radio platforms, and when he's not doing all these, he enjoys athletic running, playing musical instruments, creating art, and spending time with his family. Wow, I love that profile. So, ladies and gentlemen, please welcome us our guest speaker for today, Olisadwalima Elumelu. I really hope that I did not butcher your name.
No, you know, everyone always butchers it. Don't worry. So let me just stop it.
My apologies, please.
It's actually Olisadwalima. You will forget again.
Okay.
Yeah. Good afternoon, MC. Good afternoon, everyone. It's absolutely amazing to be here. I would say when the invitation came, I was really happy about it, and definitely it's a very interesting one because the year has been very interesting. I think some people will say the year has gone fast. I don't think it has really gone fast. Anyways, a lot of things have been happening, but today's session really would be a fusion of knowledge across all segments. We have topics here that will appeal to a lot of people who I would say are investment savvy, and then some of the fundamentals I will be discussing as well will be things that people who are maybe intermediates or just at an investment journey would like to know. So we, have a mix of everything. So I will really say thank you for the opportunity, and I would do my possible best to ensure that today's session is as interactive and as well as possible. So thank you for having me. You can project the slides now. Okay, I think the slides are on now. So you can move to the next slide, please. Okay. So the way I structured today's webinar would be, in these segments. The first one is just to do a review. I believe whenever you're going somewhere, you need to know exactly where you are at the moment, so that's safe to point A. And then point B is where you want to finish, which in this case is, for the sake of this conversation, the end of the year. So we'll have a review first, just a few points to show what has happened, just bullet points for the year. And then we'll look at what we expect the market to see for the other part of the year, which is from now till the end of the year, which is like an outlook and what we expect to happen. And then after that, what we will do is bring it home. right? Leave the technicals and all of that, at the harbor point. Now go to the meat of the matter, which is to have the session into 4 stages. Now, I structured this conversation around this because it was very important, and I'll just say the dry phase, coast phase, isolation phase, and home stretch. Now, for people who are have a bit of athletics in their backgrounds, they understand that this looks like it's a race, right? And it was done on purpose. And when I run through each phase, you understand the reason why those phases were actually tagged with those. So we'll go through the drive, we'll go through the course, association and motion. Before I go into it, I would just really sort of explain the concept of that and just a very, very short story. Yeah, Mr. Thank you for the profile you read. I mean, I do have some athletics in my background. And I remember in 2010, yes, we had all commerce meets for people who know Lagos State. We come to run for Lagos State's festival, sports festival, to pick who represent Lagos State. So I was there, I was young, and I went to compete. And my specialty was the 400 meters, still is. And I wanted to fill a second event. So I asked, a teacher of mine, and he had said, fill 100 meters, but everyone knows you're fast, just 100 meters. And I feel that. And that was the very first event I went for. When I went, and the gun went, honestly, I thought I was running ahead, but it appeared that when people were entering gear 2, gear 3, I was entering reverse, and I didn't place well in the race, right? And I think I was fifth or something, but I crashed out. And it was very sad because, I was young, but I had so much hope for that because I felt like it's my first race and I should do well. But then what he said was the 400 meters where you actually have your edge in. So, run your own race, do your own thing, segment your race. And that's how I came up with this whole idea of, knowing how to drive, knowing how to coast, because for the 400 meters, it's customized to your own performance. So you choose how you want to do it. But these phases are phases that everybody must do because you can't run the entire race flat out. And that's the reason why I, remember that I said, if the first race I ran that day was like the first half of the year, it symbolizes that if you're on this call, some people might have felt that I didn't have the best first, 6 months of the year. I didn't have the most exciting 6 months of the year. I had financial goals to meet. I didn't meet them. This is the time to start a new race, which is like your quote unquote 400-meter race. And you have an opportunity to actually, right the wrongs and, start afresh. I did. Anyways, I got to semi-finals, but and nothing happened in the end. But I could pick the learnings from that. So that's what structured this conversation. So let's move to the next slide and see as quick as possible. Okay. So market overview, what we are looking to see here is just what has really happened at the first half of the year. Essentially, the major points here will just highlight global sentiment, what has really happened. Inflation has been a very, very big topic locally and globally. And in the US, we had seen the job data come out, for the last part of the quarter, which is pretty much each one, falling below expectations. Some of the data we have seen have indicated that some of the momentum on the economic side was pretty much beginning to slow down. We had seen a few less recession concerns, a bit mild compared to where we were last year. But at the same time, concerns has still been going on. We've seen demand soften, which have indicated that inflationary pressures have been somewhat easing. And we believe that this is one of the reasons why the Fed has had its stance around holding rates relatively high. We've seen the chair make different comments across the entire first half of the year, but at the same time, all those boil down to the fact that the hawkish bias is still real there, but some data we've seen has meant that we are less concerned. So what we have seen happen is that on the summary, we've seen is short-term yields have sort of remained slightly elevated, due to the Fed not cutting, rates as quick as possible. Some of the bond prices, even though they have been volatile, investors have pretty much been trying to balance themselves to ensure that they take positions are strategic to ensure that if there are, rate cuts, they are sort of positioned, well against that. Now, one will ask and say, how does the US market really concern me? There are so many answers to that. And one of the answers really much be that if the Fed is a bit more cautious with, what's happening and holding on rates, what we might see is, investors might most likely demand, slightly higher yields, on Nigerian, debt instruments. Now, if US yields remain, most likely short term, relatively high, what that means is that some of the FPI inflows that we see in Nigeria may sort of slow down, and that's really because some of those funds will be channeled into some short-term securities on the US side. So we, might not be able to. But if, we see that the market, tends towards, higher fears of recession, what then happens is that, those yields that we have in Nigeria will become a bit more attractive to some of these investors on the foreign side, and Nigeria could benefit from that essentially. And of course, we can see that, already happening in the market. Next slide, please. Let me see. But of course, on the previous slides also spoke about Nigeria's local inflation as well, which has also seemed to soften, month on month, signaling that central bank also is keeping an eye on that, though they have not really been as rapid, to cut rates as some have expected. But of course, there's some talks about that, which we'll see in the subsequent slides. For the capital markets, things have been slightly different. What we've seen happen is sort of a pickup towards the half of the year. We have seen that where there have been concerns around some of the fixed income securities that have been expecting for some yields to possibly decline, what we have seen is that investors have also put sort of a bit more light on some of the sectors that we have seen, and some of them have actually, been safe grounds, or I say grounds for investors to enter back to the market. We've seen some of the, bank stocks rally. We've seen some of the FMCGs and the rest of them sort of have, investors pretty much come back into there. And what we can see and what we will emphasize on going into the other part of the report is that there's now a bit of momentum building on the equity side essentially. The graph here just shows the performance of the SI year to date, and looking ahead, we definitely expect that the equities market is expected to sustain some of the upward trajectory that we have seen. Vis-a-vis what we're seeing on possibly declining inflation, we most likely will see some market recovery into the other parts of the year. Next slide, please, MSA. Okay. So for our outlook, like I said, all this is, like people will say, a popular saying says everything always makes sense in hindsight. And so sometimes what we know is an indication to, where we're going. And I think at this point, Sam, I must actually say that the market is very open. It's very volatile and the nature of it. However, what we say is there are no right answers, no wrong answers. The right answer is one of my colleagues always says that the right answer is what happens after the fact has happened. But what we want to share on this call essentially is things that we believe could crystallize, and the essence is for us to be able to pad, all the listeners on this call to expect some of these market movements, even though some of those some could crystallize. We could also have some also spoil, but these are some of the things that we think might happen. Overall, the outlook looks like yields might moderate a bit. And a few things will be because we envisage that inflation might sort of continue its momentum in moderating, being that the central bank, monetary policy transmission might be, might be more effective than it is right now, and we might necessarily see some of those possible cuts, especially in Q4, because we're emphasizing this as entirely as H2. What that means is that we would be, segmenting some of those conversations that could actually happen in Q3 before Q4. So sustained moderation in short-dated yields for especially Q3, So what you say is for most hard money market funds, right? Funds in money market, right? People always ask, what's the money market fund return? What's the yield today? Is it high? Is it low? What we might see is that some of those short-dated yields might be a bit moderated in Q3, and we expect that they might possibly further decline in Q4. Foreign investors might remain a bit more cautious, and of course, but not deterred really by the yield compression. Essentially, we expect that elevated liquidity will continue to persist in the market, and of course, due to a few fact inflows that will be coming in. And I think the major topic here is really about the maturities that are happening in the other parts of the year. The graph really shows the profile of maturities that have happened in terms of trillion for the fixed income space, as we can see, starting from there's a little bit of a dip in October, being about 1.94 trillion, but we can see 3.40 and 4.24 for the latter part of the year, signaling a lot of liquidity really would be coming to the system, right? And on the fiscal side, what we see might happen is that the government, has signaled that they plan to raise extra money, of course, via the DMO through a lot of sources. And now what we have seen was that in the first half of the year, they were heavily, domestic borrowing that would happen in the markets. But for H2, we expect that we'll see, slightly more, foreign denominated borrowing, essentially. Where do we expect? Probably around the 50 to 100 in basis points cut by the CBN. Now, our job on this side of the world is to ensure that you're well protected, for these macroeconomic changes. Next slide, please. For the capital markets, I think this is where the meat of the matter really is, as I explained essentially. And I do know that before this call, people must have been seeing the news, reading what's happening, and seeing a bit of a shift in the markets. And the questions are, where do we want to put our money? What's going to happen? People on this call, I think I had asked before, joining to just get a feel of what we have on the call, and most of us on this call are pretty much young people, and textbook answer will be that we are at the stage where we can take a bit more risk. But the question here is, what risk are you taking? If you ask a person today, did you take risks? They will tell you no, they didn't take risks. But you got into your car or you got on a bus, right? You came to the office, or you went somewhere to work, maybe close hub or whatever it is, wherever you're watching from in the house, that's a risk. Because if something happened while you were in transit to work, right, you'd ask yourself, why did I actually have to take this bus? But you tell yourself, I had to get to work because there's a job that needs to be done, right? So the truth of the matter is, the question is not really about taking risk; it's about where you take risk. So what we see would most likely happen is that we do actually envisage that stability in the naira would sort of persist, and that's really because we have signals from around better performance in the oil sector. We do see signs of um, moves being made to ensure that the dependence on exportations of these oil products will sort of reduce. There are works, of course, around the refinery impact it's going to have on the economy, being that we expect that if the full scale launch of course, Africa's largest refinery comes, it definitely will support sectorial growth in the oil space. Banking sector rather, we have a couple of players that we have seen really spread their tentacles after the capitalization efforts by the CBN. We do have a couple of names, which of course we would be mentioning on some closer forums, but of course the bigger names, some of them have even listed on have dual listing on different stock exchanges, right? But there's a lot of expansion right there. That could definitely be the dynamics. Some strong M&A activity as well, looking at some of the big players like Seplat and Adova, right, in the oil space, also provide opportunities for investing. Now, if you look at where the market is, and increase possibilities of some of the topics I mentioned, which are around naira stability, it means that these would improve margins for some of the FMCG exporters, right? And that would be companies like Nestle, Unilever, and they might see an opportunity to expand their network, around the country, definitely boosting, market penetration and all of that. So those also would provide opportunities, for investors to, invest. So what I would just really say is this is a time to really look at the equities markets and but ease into it really. And as the slides progress, we'll see how we can actually support you on that journey. Next slide, let me see. Okay. So we're at the dry phase. So now let's bring it home, right? Because I try not as possible to take the most important parts of the macroeconomic data update and of course where we have an outlook, because I really wanted to ensure that we're all following. But let's bring it home, right? To Bali, right? Financial planning and awareness. Now these questions are questions that at least everybody on this call would be able to ask themselves. And I think this is the part where they say, how do they say to thyself be true, right? Where you have to, be very honest with yourself. What are questions that need to be answered for you? So the first question is, what is my primary reason for investing? Now, this question tells you what exactly you need to know from the beginning. Now, as growth, income, preservation, there are different reasons for investing, really. However, people want to grow their funds. Some people feel, oh, I saw this new Benz, right? And sometimes people see, well, I'm not say Benz because some people will say I don't care about material things, but sometimes people look at themselves and maybe assess themselves via age, accomplishment, whatever it is, and they tell themselves, when I was this age, I thought that when I become 30 years old, I should be sitting on 100 million naira. When I become 40, I should have moved into my own house. Or I would have thought that my child will be going to this particular school or whatever it is. The growth in your investments is a top priority for you because you want to take yourself from where you are to really where you want to be. Some of us have income requirements and we just feel, look, if I'm able to pay my rent, if I'm able to take care of this need or take care of this want or put my parents on a salary or no, sorry, a stipend or stipend, as some people say. I don't know whatever it is, but stipend and all of that. And so people want to preserve what they have. You have made some money at some point in time and you feel I've had a large payout, whatever it is, I want to secure this, for myself, for my next generation. How do I preserve that? This is a question that you would be asking yourself. Next question is, do I have a clear timeline for when I'll need access to my investments? And this brings me to a very important topic because if you pick somebody on the streets now and ask the person, come, would you invest money here? The first thing they do is they will say something like, no, I don't have enough money to invest, or I'm not rich, and all of that. There's a popular Instagram sensation, I think Sabinos, right? And he calls himself the investor. And what that just means is the investor is connotes a particular financial state of being where you feel, quote unquote, you have arrived and you feel like, okay, I can now invest, right? And what it means really is it's not necessarily that people don't think they cannot invest. It's because they feel investments to them is lock up front and keep it away. So they feel if I have 2K that I urgently made today and I need to spend 1K as transport home, which money where I used to eat. So where am I locking up funds? Because I used 1K as transport. Also, some people saying I say to make daily 2K, transport to make daily 2K is now 3.5. I mean, I don't know about that. But my point is liquidity is a very important concern. So you need to ask yourself, how, when would I need my money? So this helps you align, your asset choices, what you're investing in, and of course your liquidity and your time horizon. How long do I want to invest? How long do I want to invest in this particular type of security or this particular type of products? Those would help you better understand yourself. Next one is, am I consistently setting aside money to invest or when it is convenient? This is a bigger question, and that is the reason why I put a person there, because you need to, really need to look introspectively, because this is really where a lot of people actually find themselves. They tell themselves, I will invest today, I will invest tomorrow, and they do. By the time it's next tomorrow, they've done none of that, right? So this reviews your discipline, right? Discipline is a word that some people like to hear, some people don't like to hear. I mean, growing up, parents, I'll discipline you. Some people, I think if you grew up in what, the 80s or the 90s, you probably have a different idea of what discipline means from, from someone that probably grew up in the early 2000s. I don't know how many Gen Zs have on the call, but my point is, it's a word that really appeals to people in different way, make people feel like they have to sit up. So yes, discipline and commitment to long-term, wealth building. People will say, plan for today, plan for tomorrow. See, no one knows tomorrow. Tomorrow is Saturday, but my point is, you really do not know on unforeseen circumstances that may come in. You don't know what the market dynamics will be. So these are things that help you stay disciplined and on track to long-term growth. The last one is, do I understand how each asset in my portfolio contributes to my overall goals? Now, this was a question that was put on purpose here, because you see the question already says each asset in my portfolio. So we're not talking about whether you have a portfolio or not, because that is already standard. I mean, it just reminds me of what's like, I think someone was talking about something recently and was saying, if you have found yourself in a particular stage in life, there are concepts that you should have already, grasped already, right? Imagine someone being SS3, right? And you're explaining submit to them, and then it's in your solution, maybe physics or chemistry, you get to maybe a quadratic equation, right? And then you now feel, okay, it's a quadratic equation, okay, that means you're home and dry, and you go away, and the person is like, okay, how do you solve it? And I'm like, this is something that you should have done in GSS3 or GSS2. If you're still asking this here, then there's a very, very, very big problem we need to address. So my point is, at this point in time, having a portfolio is not even something that needs to be discussed, because if you are really very much keen about raising your financials to the next level, you should have a portfolio. Now, how you have a portfolio, and the portfolio that you key into is left to us, like pretty much active and passive. Now, you don't need to particularly, plague yourself with the responsibility of trying to start a portfolio, or asking yourself, what's a portfolio? What do I put my money in? All of that. That's where people like, AXA Mansard will come into play, where we can help you, take that burden off you, and help, help you key into products and explain those products, so that you can have a portfolio running and it will be as effective as you need it to. So this encourages, intentional investing, like I said, and portfolio alignment, which means that your investment starts to reflect who you are as a person. Next slide, let me see, please. Okay, so we have driven, right? They said on your marks, get set, go. We started. Now, if you're again, allow me to go back to athletics, if I may, right? When you watch the 400-meter race, the record for that, the world record for that, just for context, is for 3:03, and it's held by a man called Van Eyck, Great Van Eyck, right? And if you ask people to watch, a race, it looks like people are running throughout. That's just because the concept of training is very, 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 it cannot be overemphasized. But I can tell you for sure that they don't run all out, right? The first 100 meters, most times, is a dry phase where you have to take as much speed, as you can, but then not too much speed that you go over. So that's a dry phase, which is the questions that you have just asked yourself. If you were able to ask yourself those questions before I go to this slide, trust me, you've done a whole lot for yourself. Now it's time to coast. What does coast mean? You've achieved a particular speed level. It's now time to ask yourself deeper questions, but at the same time trying to balance. Now, the coast phase just means you're holding speed that you have gotten from the dry phase and just trying to balance things. This is where you conserve your energy. This is where you look deeper into yourself and plan the other parts of the race. So now this is about constructing or reassessing your portfolio. Remember that we've already moved past the concept of a portfolio because you should have one right now. But then, like I said, there are no right or wrong answers, right? It's really about what you want to achieve. What I have done here on this slide is to just dissect them by mere virtue of my interpretation as to what some of these risk profiles, will categorize. And of course, there are adjustments in between. So you can always look at the upper limit, the lower limit as you progress. So the first one is a conservative person. Now, who's a conservative investor? Someone who doesn't want to lose money. Someone like us came from CBEX, or I'm sorry for mentioning that. In case anybody on the call is a CBEX victim, please apologies. However, that would mean you're more conservative, which is I don't want to lose my money, right? Whatever you're doing, the money I received from a salary, the money I was given from a close friend, the money I was given from a relative, whatever it is, whatever happens, let me not, lose my money. You're conservative. If you ask a person who's conservative about their investment, most times they would give you answers, for this year, which is I don't know about next year. This is what this year is saying, right? And that also affects the kind of assets they have in their portfolio. So what you most likely see is that you'll be looking towards more fixed income products. Now, given the background I gave from the economic part of economic overview and market outlook for the year, what you're going to be looking at is pivoting towards fixed income and money markets instruments and assets. Now, fixed income, I indicated money market and bills here because a lot of us have treasury bills. You speak about money market instruments, which is instruments that have maturities for less than a year, right? You probably will be applying most of your funds there. Now, I had mentioned that some of the yields that we are seeing moderate will most likely still relatively stay a bit elevated for most of Q3. Now is the time that you might be looking to ask your advisor to say, what opportunities do I have in the market, right? And how can I lock in some of my funds for a slightly longer period? Now, the question is about liquidity, right? You need to ask yourself between now and the end of the year, what do I need to spend money on? What do I need to spend, the bulk of my money on? And how much can I actually really lock in for that period? So you'll be looking towards doing that. Now, of course, equities guys, people will say things like, I don't want to lose money, but I remember that my father talked about one stock he bought in the 90s, and today is a paper and is worth 2 naira, is worth negative, or is worth whatever it is, right? And you're just adverse towards taking risk. You can take a little portion of it, right? And somewhere around plus or minus 5%. I just have a touch of it. Now, the good thing about AXA Mansard is that we have an equity income fund, which I'll discuss much later, right? That can give an opportunity to just say, you know what, I am just tasting something, right? But you most likely would be skewed towards the safe haven. And that's fine, that's okay, because that's what you have defined as. But you most likely will be a conservative person. In the middle, we have the balanced person, somebody who looks, above the year that we're currently in, but 3 to 5 years. What we see happen here is that you then want to take on a bit more risk, right? You want to incorporate a bit more, equity into your portfolio. I had mentioned some sectors that we might look towards, putting some of our spotlights on, and then of course you trim the money market just a bit lower, right? And of course, fixed income still means relatively balanced, so 55 to 20% of fixed income, money market around 15%, which is money market insurance and also the money market fund, and then of course take a bit more equities. Now, for the people that I'm one of the people who support the fact that you have to have, quote unquote, finish eating before you invest in equities. No. But for the aggressive people that are ginger to say, you know what, this money, let's make it, right? Young and what? Getting it. They will most likely want to, flood their portfolio with a lot of equities, right? Which is taking some of this risk, but like I said, calculated risk that does not mean you would spread money into places that you do not really know. I do not mean risk that is based on speculation or something, right? Because people will ask questions and say, where are putting the money into? This is where you really need to have a decent level of information information influenced, market decisions, which of course, like I said, AXA Mansard definitely provides, a base of advisors that you can always speak to and, ask questions, right? And then they can give you an opportunities to have, those questions answered as much as possible so that you do not, miss opportunities, right? So equity most likely would be most of that. Then money markets and fixed income, just pretty much to preserve a bit of growth, right? Because like I said, some of the yields that we still have in the market are relatively attractive. So you also need to fuse some of that into your portfolio, right? So this, spend some more time, look at it, and then of course, know that the tactical allocation really means that you can really switch, between. But my point is, know where you stand today, and do whatever it means to make the most of wherever you stay at the moment. Next slide, let me see, please. Okay, so we're at the activation phase, right? Again, okay, before we go to this slide, again, very, very crucial stage. Very crucial stage. And again, permit me, please, people that don't like sports, but for sports lovers, we are back here again. Now, if for people who watch these sports, the Jamaican national team, that's a relay team, currently holds a record for the fastest 100 4x1 meter relay record, like worldwide. And I would really appeal to people, right? After this call, free time, just on YouTube, just type in world record for 4x1 meters, and then just watch the race. Probably 3 minutes, 4 minutes clip, right? And when everybody watches that race, one important and interesting thing about that race that I feel a lot of people really gloss over is this. Now we had people like Johan Blake, you had Usain Bolt, in the starting lineup and all of that, right? And at that time, if you can remember, Usain Bolt was on the lips of everybody. He was the major star. He was the world record holder. We're wondering because we already knew that they're going to break the record. I mean, everybody who knows athletics knew that you're going to break this record. But the question was, by how much would it really break this record? But the interesting about it is that if you watch that race, one name will come to your mind, and that's Johan Blake. If you watch the third leg of that race, you realize that at the second leg, it seemed like US and Jamaica were, looking to, in a tussle. But when Johan Blake ran that third leg, that's the curve, right? The acceleration phase, it was a done deal. Because by the time he gave the baton to Usain Bolt, the the conversation was like you're about to say, Orati Soro, like it was already a done deal, right? What am I trying to say? The acceleration phase was very, very key, right? And this is where you have finished coasting, right? Like I mentioned, like again, when you run your first one that you're driving, you're coasting. Coasting, which really means you're asking yourself some more questions. Now is the crux of the matter, which means you now have to accelerate, right? This is where the rubber hits the road, which is what tools are you now using? You've asked yourself questions, over and over again. I'm sure you must have attended so many seminars where people will tell you aspire to perspire to Maguire, right? But this is where it comes back to you to say, okay, where is this money actually going to? And brings us to the acceleration phase. Let me see. Next slide. Okay, we have our tools, AXA Mansard, because this is where you fall and we catch you, right? And this is a song that has been sung a lot of times, right? Which is the money market fund, and we have a money market fund every time people talk about it, but at the same time, it seems that we don't overemphasize it a lot because one part I'm going to really emphasize here is liquidity. Because if you look at where we are right now in the market, like I said, it's a time to make a decision, which is what are the benefits of the fund that I am not looking at? People will tell you, oh, you can earn interest daily. We saw the advert that played before we started the session. Oh, I can earn interest daily on a per annum basis. Oh, I can, send money here, I can send money there. How many of us, okay, I mean, some of us are, of course, external and none of that, but, we most likely will have a money market fund account, right? And what that does is that the fund compounds its interest quarterly. Now, one will ask and say, what's the essence of that? When you get your statement at the end of the quarter, it shows your interest that you've earned. Now that interest is actually calculated on your principal, which is all the monies that you have been paying in net your withdrawals. And it gives you a picture of quote unquote money that you have actually earned by investing. And how do you earn this money? Because you have forgone, relative liquidity for higher returns. And it has told you that, if you look at your Q1 statement, you look at your Q2 statement, and, compare it vis-a-vis, where the money market fund return was, it gives you an essence, it gives you a view of how much you've actually managed your liquidity, right? So the funds that you have that you're not using in the short term, why is that money in the money market fund? Is a question you need to ask yourself. So money market fund, as you see in next slides, has now grown into what we call a wallet, which is an opportunity for you to stay relatively liquid to key into some of these opportunities that we have actually said in a very timely fashion. Right. So some of the features that we have, of course, liquidation within 24 hours, a quarterly income distribution, which I mentioned already. There's no minimum holding period, right? So it doesn't mean that somebody's locking your money in, you will not see it, whatever it is. And of course, yields are really, really competitive. So I really do, would preach this gospel over and over again, but money market fund is starting point essentially, and it's designed for investors that pretty much have low risk tolerance, but then you can graduate higher and higher along the ladder. Let me see next slide, please. Now we have a customized platform, right? We spoke about some of the yields that we have seen in the market and how these yields affect you as an investor. Interestingly, the money market fund also, of course, invests heavily in some of these yields, these securities, and of course, the yields of securities most times reflect what we have in the money market fund, of course. But the fund is, of course, managed by trained hands. And what we tend to do is ensure that we are investing in the highest yielding opportunities with the, of course, required amount of risk that's not unhealthy, right? But at the same time, you have a customized platform for you. Now think about it like I mean, I was going to give a different analogy, but I think let me just, everybody's good, everybody's fine. But I mean, my point here is sometimes you see people online, they will say things like a master class, right? Or a general class. And sometimes it seems like the master class is more expensive or what have you. Not really, particularly. It means that a customized investment platform gives an opportunity to invest in the securities, themselves, right? Stripping them out. The money market fund, like I said, invest, across different securities where we now have this asset value where you earn returns in real time. But at the same time, a customized investment platform gives an opportunity to invest directly. This is now you or your own saying, where did you get this from, or what's happening here, whatever it is, and then you go directly into it. That's like you going to, a local diner, you eating a nice burger, and you feel, oh, this fantastic burger, and then you ask who made this burger. And when he says, oh, it was me, I'm like, oh, okay, where do you get the meat from? Where do you get this one from? Where do you get this sauce from? Find out exactly where you've had the burger. Don't get me wrong. But at the same time, if you feel like you can, take it a step further, you can actually go directly to where this was bought and then try to, customize experience for yourself. It might be that, the sauce was too much. It might be that the spice was, not enough, whatever it is. You can now customize your experience. Now, three important factors of this, where the team has constantly worked to ensure is better, is our self-service on our platform. Now, interestingly, some of us get newsletters right week on week, but sometimes we also send opportunities to your email where clients are being empowered on digital platform to access some of these fixed income securities via your money market fund. So, like I said, money market funds can serve as your wallet where you can, key into opportunities, bills, commercial papers, tenor deposits, whatever it is that we have seen fit for you. Now, the question is this: what are we serving to you? Now, before these securities are being pushed to you, what we have done on a portfolio management and risk assessment, leg of things is we've pulled through the investments. Now, like I said, whenever people hear investments, some people have trauma. What we have done is to remove the burden of you having to ask too many questions to say, what are the best investable great securities I have in the market because there are so many, right? So when we see them, what we do is that we go through a documented process to ensure that every security is correctly profiled before they come to you. So the trust that you have put in, AXA Mansard is what we extend back by doing the groundwork to ensure that when opportunities come, you can definitely key into them, of course, regarding your current liquidity and portfolio requirements and objectives. So transparent tracking, which is it's on the portal, on your dashboard. You can see it. You invest in any security, it pops up on your dashboard. You can log in and say, okay, I invested in this bill, I invested in this security, whatever it is. Second is flexible tenures. We try to ensure that we spread the reach of these opportunities that they cost across different tenures, and of course, competitive rates and real-time execution. So this is pretty much what we have on our investment platform. And of course, I'm going to implore you to do that. I put a screenshot of this because sometimes we have all these sessions and we need to ensure that there's some level of continuity after the session actually happens. So this is a screenshot on our AXA Mansard website where you can just go and click, and of course, it takes you into what you need to see. Next slide, please. Okay. Again, our people that have quote unquote chop benefit, but not really actually, because right now the foreign currency conversation in Nigeria is one that has been expanding, day in, day out, where people are now beginning to have reasons to not just store currency, but possibly hedge against, inflationary pressures, which in the market are beginning to sort of, subtle. But my point is the dollar bond fund is a product from AXA Mansard that really gives you an opportunity to have steady dollar income to investors that pretty much seek to optimize returns and take FX positions. Now, when we look at the foreign currency market, there's so many securities that you can actually plow your money into, right? The major concern here is the minimum lot size or the minimum investment. We hear about bonds, we hear about notes, we hear about dollar denominated assets and all of that. And the questions are more on that side because people say things like their transaction costs, my bank is saying this, my bank is saying that, can I move money here? What can I put the money into that yields results? If I earn this amount of money, would transfer charges remove them for me? All these questions are questions that the AXA Mansard Dollar Bond Fund will help you. Competitive returns, there's a minimum working period of 180 days, which is 6 months. The redemption is between 3 to 5 working days, usually, sometimes less than that. And of course, all efforts have been put in place to ensure that we pay dividends into the fund. So if you're a fund holder, you expect some, good dividends to come, to you regarding those fund positions every year. So the dollar bond fund will be an opportunity for you with a minimum of $2,000. You can invest in dollar bond funds. Many people say, do you invest in I invest in dollars as well? Yes, I invest in dollars because you're investing in dollar bond fund essentially. So yeah, you can spread your tentacles to foreign currency with this tool of ours. Next slide, please. Okay. Let me see, please, previous slide. Yes. So home stretch, right? Now again, for the final time, if you're at this stage of the race, honestly, some people might disagree based on past experiences, but most people would actually agree, which is if you look at the races that have to do with, of course, the 400, it's graduated, which means you're in lane 1, you're probably far behind. If you're in lane 8, you are ahead. When we're younger, we'll ask and say, mommy, daddy, if they're running the same race, why is that person in front and why is that person behind? Or why is that person in the middle? Or why is this person positioned here, positioned there? When you get to the home straight, you will know the reason why the person in lane 1 was where they were and the person in lane 8 was where they were. But the most important thing is this: at this point in time, you've driven, you've coasted, right? You've accelerated. Mind you, if you accelerated in the third phase, by now your legs are weak, right? Which is, how do I hold myself with everything I have to the finish line? right? This is where a lot of discipline, consistency, cautiousness, just a sense of, I've held things down, but what I have done, I've run a good race, I've gone 300 meters, final 100 meters, what do I do? How do I ensure that there are no shots? How do I ensure that the finish line is right in front of me and I finish well and I finish good? I'm ready in the latter part of the year. How do I do? This is where the buck, comes back to you to say, what is my attitude towards? So that's why I structure this part of the conversation into the home stretch. Really, what are the things you should be doing in the home stretch? Next slide, please. Yes. So now, this is about maintaining your objectives and maximizing, to maximize and maintain your gains. Now, at this point in time, we envisage that we've helped you, right? Some of these things that we've taught on the call, you've been able to put them, appropriate them, right? And now the buck is back to you. Now, if you look at the slide, people and ask them, ask a person, what do you know about it? Some people that maybe, let's say, have OCD or have have a way of having their things. You say, why is this light? Why is this place blue? Why is this place? It's on purpose because the first thing is spend cautiously. Spend cautiously. Now, no matter what has happened, and no matter the mileage you've gone through, whatever it is, if you don't spend cautiously, right, you've just pretty much eroded some of the wonderful things you've done already. So it was there in blue because I know the kind of audience that we have, right, which is a Nigerian, very okay. I probably people are signing from over the world, but I do believe that most of us are actually from outside of the world, right, which is not over, we can't overemphasize this enough, right? Like I always tell people, I always say, spend what's left after investing. Do not invest what's left after saving. Some people say things like, I beg, now who they chop, they invest. No, I understand that. My point is just invest first. If you can just start today and say, you know what, if I know I'm going to earn 500,000 naira, right, this month, right? What part of it do I know that worst case scenario I'm going to invest? Invest it first, right? Because sometimes when you front load some of those investment moves, it helps you even base, the work, right? I mean, I'll tell you a little, just a little story because there was a time I was, I was in church and my pastor had said one time that he was doing, we're undergoing a major project, and he had said he needed someone that he could really trust, to go on that project, supervise it, be the foreman and all of that. And he knew that, a project like this, it will tell on your discipline because you might think that you have everything together, but then, one wrong turn here and there. So he said, you know what, he found someone and said, come, this project is going to most likely span this amount of time. I need you to be able to manage the project. And he said, okay, no problem. He said, I know that you want to make money from this project. No problem. Tell me how much you want to make from this project today. Let me know. He looked at the project, he looked, he assessed, and he said, Pastor, 500,000 naira. He said, 500K is what you want to make. He said, 500, you're sure, 500K? He counted 500K and he gave it to him. Why did he say, I wasn't anything, but this is 500K you're going to make. Now sit down and do my work. What did that really mean to me listening to it? I just felt that sometimes if you know that some of the complexities around a project that you're going to embark on have to do with discipline, it might be good to do the harder parts first, right? I know that, okay, I've done this thing first. In fact, you might even overshoot it and put more emphasis there. Some way, somehow, you rebalance. But if you allow the project to start, allow things to start, going through in and out and all, it is a bit difficult at that point in time to get a bit of discipline at that point in time. So I will envisage, I would really say, please, before you spend, just invest something. Money market fund is there. You have new bank. Just wire the money there first. Then from there, like I personally what you usually would do is wire money there, and then let the I always have a mental picture where it is, I see myself as a court. So I see it as if I receive my salary, let's say my salary now 25,000 naira, right? And I get 25,000 naira as my salary, and then I maybe invest 20,000 naira today, right? And have 20,000 naira in my money market, and it's there, and I feel okay, it's okay, no problem. I have a business I'm doing, and this is the proceed from it. The next thing that comes to mind is billing, right? So some people will know what that term symbolize billing. Even if people don't bill you, life will bill you, right? So there are subscriptions to be done, I think to be there. Some way, somehow, that money is somewhere. And all these expenses now stand before you in court to defend the reasons why you should withdraw money to settle them. And sometimes, the reason might just be I saw plantain chips and I want to buy, and the plantain chips is 50,000 naira. And then if you have that money in your wallet or your bank account, star something, face ID, the money has gone, receipts done. But if that money were in the money market, even if you don't know that money market is of course 24 hours, you get your funds, the payout service is quick. You might want to ask yourself, say that plantain chips really, do I really need to buy that plantain chips? Do I need to? If I don't get it, can I get something else that's cheaper? Or that you tend to ask yourself this question. So please spend cautiously. The next thing on that is an emergency fund, which is you need to be able to guard yourself against, unforeseen circumstances, which is the reason why you have your bank account. Someone asked me one time and said, would you say bank account should go away? No, I never said that. Right? Bank accounts pretty much, would be in a bucket, right? Even money market can be, a reservoir. Money market can be a bucket. Your bank account can be a bucket, right? I've not seen anybody take their bath from a reservoir before, right? But you take your bath from a bucket, which is you fetch water from the reservoir into your bucket and then you use it. So you have an emergency fund, right? Which is your own urgent 2K fund, which is your bank account, right? So circumstances that arise, you need to ensure that at every time have some, which is maybe probably a weekend, maybe a weekday, whatever it is, you need to have that emergency fund there so you can call it at any point in time. The rest, which not really like they are less than the first one, but my point is these are things that are a bit, they hit differently, right? And next thing is stay informed and stay ahead. Market, pretty much reward the proactive people who know about it before, it really happens, right? Are people that, sometimes would say the market react, favors. Now, what do I mean? What's happening in the markets today? You don't necessarily, because I do know that people on this call, are diced into different categories, and people are hearing inflation for the first time today. Some people have heard it for years. They're professionals. Yeah. My point is, just ask yourself, what important thing has happened today? And what does that have to do with my money? Like I always say, if your advisor is one call away, you can call and say, I heard that CBN said this one. What does it mean for me? Or I heard that, US said you can no longer come into so and so and so. What does that mean for me? Even if it has no, maybe correlation, whatever, but you just need to know how these things do. So you have to stay informed. The AXA Mansard group, supply and sends weekly newsletters to investors. Which is the reason why some of you found out about this, webinar, happening today. Go through it. It's there. It's free. You look at insights from analysts or your investment advisors that you have, right? And just try to speak to your advisor as often as possible. The advisors on the Akaman side are very very much approachable. You can speak to them about anything, and you can speak to them, and they can give you responses in real time. Review your investment plan. We assume again that you've had a plan already, because seeing whatever it is, there is a plan to it. And the major part of this session I structured was really about laying out all the information that you need for yourself. Because again, what some people make a mistake to do is they sort of streamline an audience into saying this is the only thing you should do. No, opportunities arise in so many places, right? So your plan is also something that comes from within. Like I said, you can only discuss that with a professional, right? But it is your own plan. So you need to ask yourself and say, important questions, have there been any changes in my income? Like I started this thing since, between first half of the year and now, have there been any changes? Are my goals now looking like, they are coming together, right? Does it look like the vision is blurry or is not, right? You need to ask yourself and answer as honestly, as possible. Ask yourself, is my current allocation to my assets, is it appropriately split? Okay, Lisa had said this would happen. Okay, I keyed into that. Is that happening? Is that not happening? Or do we need to wait for something else? Are questions that you might need to ask yourself, really. And of course, again, answer. And most importantly, do I need to switch? Right, or do I need to stay within the same currency I'm in? I always do advise a currency split at every point in time. Have a staggered approach, which is just having things everywhere, right? Spreading things, currencies, right? And having things. I mean, that's one place that you are allowed to, play around a bit, right? But ensure that the objective is key, which is trying to remain flexible at the same time hedge against, of course, inflationary pressures, right? So ask yourself, do I need to switch? Do I need to take more, FX? Do I need to wind down my FX, right? And these are things that you need to balance by reviewing your investment plan. And the last, but definitely not the least, is stay disciplined and not distracted. This is for, in fact, I should have not said it, December, particularly. You see, I said it. Avoid end of the year hype and fear during decisions. Like people will say, this is not the time for maximum oblaying, right? Like someone will say, right? Oblay, but oblay with a bit more caution, right? Do not erode all the gains you've had, over the last months, right? Because then what happens is that you're end of the year and it seems like, what has happened here, I don't even know what has happened, right? If possible, you can have a budget for it and tell yourself, you know what, I would oblate, when I keep saying oblate, I would enjoy myself to the extent of this budget, right? And you can customize it. You can even have a fund for it and say, you know what, if I'm able to invest well, I can spend 5% of my, interest on December or end of the activity or whatever it is, because of course we do encourage people to have a balanced lifestyle, right? But at the same time, the objective needs to be in check. So stay disciplined, don't be distracted, and more importantly, right, start to plan for Q1 2026. It can be overemphasized. At Axamanta, what we do is that we see investments as a journey. We don't see it as a start and stop. So even if the theme of the webinar has been second half of the year, focused, we don't expect that after the end of the year we'll say, okay, I've run my race. It's a continuous thing. We just do believe that the momentum that you have gained from the second half of the year will definitely plow you, into the next year, right? This is the first time I'm actually talking about 2026, and it just seems so close. But please, we're still in this year, right? Right. But you need to start to plan for the next year. And I think with that, next slide, it brings me to the end of this session. And I never asked if people could hear me, but I just hope that I have not performed to myself. But thank you very much for listening, and I will take questions. Over to you, MC.
Okay, thank you so much. That was actually a fantastic presentation. Thank you very, very much. Even if I do say so myself as part of the team, but yeah, that was a wonderful presentation. I do see a few questions in the chat box. I see a question from Ajayi Anthony. I see a question from Ajayi Anthony. It says, okay, good morning. How often do you have this webinar? Once in a quarter. Anthony, once in a quarter. So you should expect another one in another 3 months. Okay, can I invest Naira into the dollar fund? Please.
If I had a dollar every time I got this question, I probably own the dollar bond fund by now. Okay, so how do I explain this? You cannot invest the naira directly into the dollar bond fund, right? You cannot do that right now. And that's not just because it's an Mansard thing, but of course, regulatory requirements, you can't switch currencies like that. What we do have is that we just encourage clients to be able to have their dollars converted. Now, the dollar bond fund accepts inflows. And this is because the CBN requirement now means that the same format that you have paid money to an account is the same format that you have to transfer, right? So the first answer to your question is, you do have to have dollars in inflow format before you can transfer to outstanding. Next question really would be that some people will ask themselves and say, I've had some money in my dollar account, right? And then I cannot move this money because my account officer says I can't move the money and all of that stuff. We've heard you. We've heard you, and we definitely have heard the cries. What we have done right now is to one establish some relationships among these banks where we do have strong presence there, and we are able to aid that transfer process. One. Second thing is that we do have in documentation that we can assist clients in this situation to request. So if Missy says, I do have $10,000 in Luminous Bank, right, and I'm having issues, we can write to Luminous Bank to say, Mrs. Yemisi has an account with us, and she will be expecting this particular amount of money to, and then they would honor it. And the leadership at AXA Side Investments is definitely poised towards tackling this particular challenge where we do it on pretty much a one-on-one basis. And so far, we've had more seamless transactions than otherwise, right? But on the other side, I think the last one just be that sometimes we have opportunities internally, but those are pretty much sometimes rare. But we have opportunities where we do have relationships with some of the currency approved currency trading platforms that we have onboarded. Of course, based on trust and, like I said, documentation, right? Not just for Nigeria, but of course, across the region where we have institutions that stand for the same values that we stand for, and of course are have claim books, and then we can transact with them and assist clients to convert their dollars, carrying them along and across the way. But these are occasional, but then we find a way around it essentially. So that's
All
answers
right.
your question.
All right. Thanks, Olisa. There's a question. Okay, actually, there are three questions from Ify. The first one says, does investing in the equity fund help manage the impact of inflation on your funds?
It's a very interesting question, really. How would I answer it? The closest you have to returns above the inflation line, most likely people would argue that's equities, really, because you're taking direct exposure to the capital markets. And I would say that the the returns you can get on that sometimes are, in multiples, right? If you have a good investment plan, or sometimes some people actually say it's really luck. I do not believe in that school of thought. I believe that the market is a game of calculated risk. However, you have a higher chance of investing, getting real returns returns above the inflation line when you have equities. Now, the equity income fund invests in some of these securities where we do have a fusion between most profitable securities in the market at the same time with sustainable and ethical investing, right? And some people say, what does equity fund invest in? There are some sectors that we deem as ethical, that have ethical practices that we invest in, right? But we tend to gear towards the best opportunities in the market that align with our goals and, of course, sustainable investing. So you do have a shot at earning investments ahead of the market. Now, one important thing I must tell you about equity income fund is it's on a differential basis, which means that as I'm talking, some people have gone online and checked and seen equity income fund is returning X percent. Put money inside. And yeah, while we do commend the amazing work that the team on the equity income desk, has put together, for the year performance, which has been, remarkable. What I would say is that it's a differential between where you come in and where you possibly want to exit the fund. So the gains you're seeing, excuse me. Thank you. So the gains you're seeing on that side have most likely been enjoyed or impacted by people that were already in the fund. But you know, we discussing the market dynamics that we had seen in layer sides, we do expect that some of the gains that we envisage should materialize in the second half of the year. So if you come into equity income fund right now, if I were you, I'll come to the fund with few reasons. One, I need to have a share of risk in my portfolio, which gives an opportunity, at least a chance of earning returns above the inflation line. Two is that I need to diversify my funds. No matter what has happened, right? I need to have a little bit of it that will be in equities, right? And the third thing is that again, it gives an edge, right, to be able to possibly give myself opportunity to earn in above market returns. I'm not necessarily going to come in with the expectation that it would go from where it is and add, a couple of tens or 20 percentage points, not necessarily, but like I said, the market is moving, right? And sometimes things have happened in the market today, there are circumstances that may happen in the market, and we have to just keep adjusting. But most importantly, I will look more long term, or at least mid to long term, which is above this year, right? What do I think that these companies would, do more? Think about it yourself. I mean, look at, if you go online and you Google and see Amazon 1999, you see where Amazon was. You see Amazon 2025, you see where Amazon is right now. Over time, people would, argue that the stock market just really means that over time you earn more. So you need to have a more than 1 year view, right? To saying, not that you invest in equity from today now, you now go and checking it every day to be saying, you can check it just for transparency's sake because we do provide you that. But at the same time, you need to understand the fact that you're looking farther into the future than the short term. And if you're looking short term, chances are that you most likely belong in the money market fund, which you want conservative returns, and you say that you'll be happy. But yes, equity income fund gives an opportunity to earn above the inflationary line, essentially.
All right, that was a great answer, Lisa. Two more questions from Ifi. Can you invest as a group, as in a group of friends with one account? And then, is there option to invest in foreign equities, or is it just bonds?
Very interesting question. I'll take the second one first. We like I said, like Mansard as a brand, leveraging on partnership a lot of times, and partnership being that we tend to extend our arm of friendship to so many counterparties with the essence of serving clients better and protecting their interests, right? So we do have exposure to some of the counterparties for global equities. We don't trade them on our platform, but we do have a partner, which is a partner. We do have a tracker platform where clients can send their money to us, and then we can onboard them on that platform via their Axiom Mansard accounts. And yes, they can invest in global equities via us and take off some of those risk positions, right? Which really would be highly advised. We do know that many times, questions really come around psychodynamics and market expectations. So I believe that investing in those securities just need a bit more thorough work, expense ratios, some of the expected PEs, right? So we can answer all these questions before you make those moves. I think there was a question about bonds. What was the question about bonds? Was bonds in that question as well? Oh, you're muted. You're muted.
The first question was, can you invest as a group, as in a group of friends with one account?
The answer to that question most likely would not be as a group per se, You can invest as an individual, definitely, and as a corporate. Corporate being that there are documentations that you have to show, right? That you are a registered entity by the requirements of the regulators, right? Because if you're a group, what if happens if one person fights? There needs to be an opportunity to say, this is how we are in the eyes of the government. We're registered. The documents are shown. The leadership of this group or this organization, this is what we stand for, right? And we do a lot of those checks to just ensure that we shoot ourselves. And I must say that again, group wise, AXA Mansard as a group is very big on concepts around AML, right, and some of these compliance measures where we ensure that we do a lot of checks, right? So documentation are needed. We are very big on KYC documents, you know your customer documents. So some of those would be very important to establishing a relationship that we can actually just tell this is exactly who these people are. So once the documentations are there, ready, your group or organization is registered, under Nigerian laws, of course, we can set up your account and invest for you.
Thank you, Lisa. Okay, someone says, please, how can I speak to investment advisor at AXA Mansard? That one is simple. Even I can answer that one. You can send an email to clientservices@axamansard.com or call 0700 AXA Mansard, and we will take it up from there immediately. We have a question from O Midesu that says, very informative session. Thank you. Quick question. Did you say $2,000 was the minimum to key into AXA Mansard dollar bond fund?
Yes, 2,000 US dollars. 2,000 US dollars is the minimum to
Okay.
invest in dollar bond fund. Yes.
Another question says, I've heard the principal portion of the dollar fund can fluctuate. This makes me feel principal is not secure. Is that the case? Can the principal be eroded?
Okay, very interesting question. And I think this person is coming from a bit of a mark to market position, which means, and I think people are following the news where regulators have been saying that, we might need to do that. Currently, the fund is, being, run on an amortized basis, which means that the fund is being seen as the returns are on an accrued basis, right? The question around losing, capital, right? Of course, with every investment that you take, there's a bit of, risk to that. Now, what we have done to mitigate that is ensure that our investments, that our securities that we have exposure to, are being laddered, meaning that we do not face, high reinvestment risk, right? This is because if you do that, that's a situation where you are a bit long on some securities and then you have to invest at lower yields. What the fund does to protect you against that is that we prioritize capital preservation over increased yields. And it's a very interesting question really, because some people would ask you and say, I got this fund return from this place and they are doing higher than what you're doing or whatever, right? Sometimes those yield positions have been established because they have taken, a few longer positions than we have. So to mitigate that risk, what we have done is to ensure the fund is, very much balanced. We have a fact sheet that shows our exposure to different securities, but what we try to do is ensure that the fund is well positioned to ensure that, we do not have situations like that. And so far, it's been a good journey for a couple of years. We've not had situations like that.
Okay. Someone says, how secure is the money market fund? Is it insured? If it is insured, what's the percentage insured?
Let me see. This is a question that you can. Is it insured? Is it how secure? Security is an important question, really. Yes, and to the extent that the money market fund, like I said, is a fund, so it's invested in different securities across board. Now, what we do on the money market fund side is that the fund is exposed to different securities, and these securities cut across sovereign security, government securities, which are risk-free, and of course, a fair exposure to money market instruments, which are fixed deposits, commercial papers with reputable investment grade institutions, right? So what Axel has done really is to take the questions from you really before you even ask them, right? And ensure that. So what we do is that is backed by, of course, the full faith of the federal government, but not to the extent that the allocation is not. What we do perform on the other side is to mitigate our exposure to the type of counterparties that we believe financially are clean. And of course, in terms of financial statements, they are well positioned for them to not have any form of credit or default risk associated with them. So we have this question come a lot of times really, but the money market fund is pretty much is there to protect you really to ensure that it is substitute to your bank account, so to speak. So you will not have much of that to worry about. I like to say because ethically, you're not allowed to say it's not possible or risk, or risk at a healthy level. It's not. It's low risk, really, absolutely low risk. So you can rest assured that your money is safe.
Okay, thank you. Olabilufemi says, why do I need to allocate 75% of my idle fund to ETF?
That's it. That's a question. Well, so it's really about. So on that slide, I think I know what he's trying to say. You need to do it if you want to be aggressive, right? How will I say the question is very similar to saying, why do I need to buy a Liverpool? Why do I need to spend a £70 a Liverpool jersey, right? I mean, you're a supporter, right? If you want to be aggressive, you definitely need to have exposure to that. Now, these exposures are relative, right? It just means compared to some other assets. You can have the portion of your assets diversified into equities. Now, we don't know how much money we all have, right? For instance, myself, maybe I have like 10,000 naira in my bank account now. That's all I have. It means that if I'm investing, I'm investing what? 7.5 in stocks, because I want that 100,000 naira to become 10 million naira. Like, yeah, me see tomorrow. So I'm aggressive, right? I'm aggressive. That's the only way, really. But if I'm being conservative, what that means is that I am seeking more towards holding the 10,000 naira that I have rather than the opportunity for me to earn so much more. So to answer his question, really, if you want to be aggressive, then you do have to rev up the numbers on your equity exposure to be associated with that. So that type of return segment.
All right, thank you, Lisa. We have a lot of questions actually. This one says, please, sir, just give a short recap on the difference between equity market fund and customized fund.
Equity market fund.
I think she meant to
Income,
say equity
in,
income fund
income fund and
versus customized.
okay, a recap. Okay, fund just really means that it's a pool, right? It's a pool, and I don't mean swimming pool. I mean investment pool, which means where you're putting your money, other people are putting their monies as well. Now, the fund has a team that's behind it, which means they invest the pool of funds into different stocks. So if I the minimum investment for equity income fund is 10,000 naira, I think I don't know if I said that. It's 10,000 naira, right? Which means 10,000 naira buys you certain number of units in the fund. Now, your 10,000 naira goes into a pool of funds. Yemisi could bring 100,000. My friend Duracell can bring 500,000. People can, so the fund becomes what, maybe 100 million naira fund. Now, out of the funds, out of the pool of funds, then I can now allocate, funds to where I believe the best opportunities are. When those opportunities are yielding, returns, then there is an aggregate of all the opportunities I have, and that is what the fund return is. So when you say the fund return is so and so percent, or 10%, or 15%, it does mean that the aggregate of all the, you know, returns on all the stocks are net that amount. That is what you stand to earn. That is the fund. The customized investment, pretty much just means that it's like going into a government hospital and you say, or a hospital rather, and you say, I want, I have to be admitted, whatever it is. They're going to put you in an open ward. You're going to have you might have malaria, but the person beside you can have cholera. The person beside the other side could have had their foot amputated, or whatever it is. Different things, make up the entire ward. But then if you say, you know what, I don't want to be here, I want to have a private ward to myself. What then means is that if you're in Nigeria, obviously they will charge you more. So when you have minimum investment money market at 2,000 naira, the minimum investment customized investments is 5 million naira. I should have actually said that is 5 million naira, right? So deposits, commercial papers, bills, 5 million naira. Now, some people will ask and say, but I thought they say you have to have certain amount of money to buy treasury bills. Yes, you do. What Axamanta does exactly is we pool these funds together. So individual investors can have a share of the pie. So with 5 million naira, about 5 million naira is a reasonable, minimum threshold where you can access the market. So customized means it is you on your own. You get an investment advice, which is a certification letter that shows Mr. Olise has invested 10 million naira in EMC and Co Industries commercial paper. It's going to have your name, it's going to be signed, it's a document that can be presented anywhere. And when your fund matures, you would have the funds returned to you. So that is a you alone. You do not know who else has invested in the commercial paper with you, but that is your own investment. I think another thing I need to mention is the volatility of it. So if you have a customer investment, it's a fixed, most likely a fixed investment, and it's a fixed rate from where you've invested to when it matures. So you don't have to worry about the volatility really. It's a constant yield till maturity, essentially. So that's the difference between equity income fund, and I did try to explain funds as well, so that you now understand that if equity income fund is a fund that invests in equities, the money market is a what the fund invests in money market
And money
securities,
market.
treasury bills, and the rest. Exactly.
All right. So Nuhu Aliu says, please does the AXA Mansard Equity Income Fund have a minimum holding period?
A what? Minimum holding period.
Minimum holding period.
So there's a minimum payout period for the equity income fund. I believe that's 3 to 5 working days. Why? Because when you invest in the fund, right? Just imagine now, right? MEC, wants to go to the market, right, to buy goods, right? MC wants to buy carrots, ginger, whatever, to make jollof rice, right? And the MC says, I'm going to cook for 20 of you, right? Or 20 or more. If you want to eat from this food, pay a minimum of 10K, right, to this my account, right? Now, MEC sees alerts coming in here and there and all of that. And before you know, MEC feels, okay, about 100 people have paid money. Some people, 100 people, maybe 110 people, right? So what has happened is that MEC is already calling the vendors, finding out how much is tomatoes, how much is rice, is it basmati rice I'm using, is it whole grain rice I'm using, how much is ginger, tomato, soy sauce, I'm already getting hungry. Okay, my point is, she's finding out, all these prices, right? And she has expectations on what she's gonna buy. Mind you, some people have said, let me see, last time I ate your food, fantastic, I'm paying 50K. Some people will say, let me see, last time I ate it, I'm paying 1 million naira. Some people say, let me see, I've not eaten your rice at all before. Let me just pay 10,000 as minimum, right? But my point is, there are already plans to buy all those ingredients with the pool of funds that you have. And by the time you get to the market and you buy those ingredients, what then happens is that it's an entire process to how the seller will get the money, how it's delivered. If you sometimes you go to the market, right, and you buy what's called akpon, what's the agbono, right? And they use the coriander, right, to to make it into bits for you, right? A lot of all that happens, which is what is called the clearing and the settlement in equities. A lot of all that happens within a time frame, which is around 3 days, T+3. So when all those things settle, then the money now starts to be fully invested in securities. So the minimum holding period really is an essence of if we do all that between that period, what is the fastest time then the food can be ready? Because between that and that time, if someone now says, as Yemi said, go to the market and Yemi has paid for carrots or paid for chicken, there's someone that comes and says, Yemi, see, something just happened. Oh, my grandma swallowed shovel. I need my 50K back. What then happens? Yemi will say, a lot of people have already bought, 2 cartons of chicken. I cannot take the money back. I can't, so Yemisi now starts to, ask questions about liquidity. How can I move around, all of that stuff. So what we do is have a period where it's like, you know what, by this period, just wait. Once you put the money in, all the market runs happen. We cook the food, it's being dished, right? In fact, when it's now being dished, you can now say, I've seen the food, I still don't want to eat it. Then we can now give you your money back. Meanwhile, at that time, someone else is coming into the fund and he's saying, love rice here, I'm eating, right? So the minimum working period somewhere is around, 5 days, which means that you have to ensure that, the money has come into the fund, settled, and all of that before you take. But like I said, really, if you're investing in equities, right? I know circumstances can arise. People might make a decision today and then tomorrow, something else comes up. But we do really emphasize and advise that the part of your funds that you invest in equities, I like to be extreme and say, see it as a part of your money that has gone. Like you're not using it again, right? Because ideally you don't really see people you come to the fund and want to come out quickly, except you want to time the fund, which I don't necessarily want to advise. But you take a step at it. Invest in it, leave it there, watch it grow, right? Let's watch it. Collect dividends. Collect again. The fund pays dividends, right? So collect dividends. You see your money grow, appreciate. Just watch it go up, go. Whatever it is. I mean, keeps going up really, but point is we try to envisage that we don't really have going and go out the fund, but that's also the question.
Okay. Wow. Thank you for that. The time is really fast spent. I think we can take 1, 2, 3 more questions.
Okay.
Right here on the call. We have a question from Bisala Sala that says, what investment is available with a high percentage that lasts for at most 3 months?
With a high what? With a high
percentage, I think means return that lasts for 3 months.
Within 3 months. Okay, so all the returns that we have, just for the sake of uniformity, they are all on per annum basis. So when you see 23%, means 30% of per annum money market fund, all the returns we present are on per annum basis. But the market is moving really, and very interesting question at this point in time because now probably have yields at their most elevated period before they start to come down. We do have different opportunities across counterparties that are from tier 1, tier 2 banks. 1 or 2 microfinance banks, right? Opportunities, and they range currently markets somewhere between around 19 to 22, 23%. Of course, they move markets, right? So this is a range we give. But per transaction, we can give you the most recent information when the funds are ready. But this is the range that the market is currently trading in. And highest opportunities, of course, we do highest and investable grade security. We do have those within next about 23% currently. Next question.
Okay, thank you. We have one from Timothy that says the equity income fund is currently offering 17.38%, but the NGX appears to be performing much better. Is the difference a result of risk appetite? Should we expect better returns based on current market dynamics? Can we test the market ourselves?
Interesting. If you have to ask if you want to test the market, I think your mind is already in the market. If you have to ask that. But what I would say is this: hogging the index has and investing in specialized securities has always been a debate for a long time. People like to hog the index and they'll say, what, if the NGX is doing this, let me just do this right now. One important thing you need to understand is that the NGX has opportunities that Mansard ethically also doesn't take exposures to. So very interesting question that you asked that. And if you look at that vis-a-vis, the sectors that we actually play around in and the specific selections that we take would sort of account for these differences that we have. I would say a mixture of both is good. You can have funds in inject, you can have funds in equity income fund, right? There's no rule to how much extra you can have across the board. There's no rule. I will envisage second approach. You can have a split between NGX and the equity income fund essentially. Really. Like I said, ethical investing is something that we take highly serious in AXA Mansard, and that's what also drives our investment on the EIF side. Thank you. Next question.
Okay, thanks, Olisa. What's the rate of returns on the lab fund?
The dollar fund. Dollar fund, what we report, we on a yearly basis, you get somewhere between 4 to 6.5%.
Okay, Sam says it's a lot. First, it seems you guys have an app because I searched on Google Play Store but couldn't find it. Okay, our app is My AXA Plus.
My AXA Plus, yes.
My AXA Plus, please. It's right there on the Google Play Store, iStore as well. I don't have an account with you guys, but sincerely, I do have an account, but sincerely, I haven't started it yet. But I'm ready to start now after this. And I have some 10 million to start. But which portfolio would you advise me to invest in? PS, I already have another running money market fund with another investment.
Okay. So asking where they need to put the money in. Okay. Yeah, if that's the money, of course the flagship product is the money market fund. So you'll be on many by the money market fund actually. And then with 10 million now, there's room to explore diversification. We can have a split given your objectives that you want to achieve, which is after we have a conversation. There's an opportunity to have maybe half of that really in a locked in position. We do have opportunities in tenor deposit and fixed income spaces. You can have exposure to that, and then if your liquidity needs will permit you, then you can have the balance in the money market and of course equity income funds accordingly. So that would just be it. And what I just said really is skeletally is really for a slightly balanced, stroke conservative investor. But these are questions that in interaction, and we can definitely provide you clarity as to where you should invest your funds in.
Okay, what I will add to that is I think it would be nice to speak to somebody directly. So maybe you could send an email to clientservices@taxamaster.com. I'll just type it out and somebody will take it up from there so that they can advise you clearly on how to make investment decisions. NUPRC at 3 says, please throw more light on equity income fund distribution coming up on Wednesday, August 6th, 2025.
I didn't get that question.
Throw more light on equity income fund distribution coming up on Wednesday, August 6th, 2025.
Oh, dividend. That's dividends of the fund dividends. Income distribution is fund dividend, really. It's about
Yes, I believe
funds that are
so.
holding. But there's a markdown date, which is where you should have already been informed to get those dividends. So it's really about dividends being paid for unit holders in the fund from the portfolios essentially. So you should receive that. Should you have been a holder at the specified date, you would get the dividends. That's all. Next question, please.
Okay. I think I may have. Okay. Great presentation. This is from Bonaventure. Please, I need clarification on which investment opportunities I can explore or diversify from my money market fund.
Platform. The money market gives you an opportunity to invest in the customized platform through our self-service. Self-service is on the website. When opportunities come, we email them to you. We know people don't have your time every time to go on the website, but when the top opportunities come, we send them via mail. So this is a wake-up call. Once you see AXA Mansard, click on it. Just find out what's going on.
Exactly.
Right? Click on it. Because what we see happen sometimes is that and again, ethically, what we do note is that as regards to fair dealing, which is pretty much a CFA, ethical concept that we respect at AXA Mansard Investments, is that we ensure all clients have equal opportunities to invest in the securities. Right. So sometimes people say things like, I didn't come in this because once it goes online, we give everybody a fair chance to get it. So once you see that, please click on it, log in, look at it. By now, this is the time to actually engage your investment advisor So you know that the moment something drops, if it's commercial paper, I'm doing it. If it's a T-bill, I'm doing it. Whatever it is, if something comes up and I'm like, okay, no, I need to talk about this, listen, that's fine. But immediately you see that, please click on it. There's always something new to learn from AXA Mansard.
Alrighty, thank you. I find it difficult to invest in other options like equity income fund. May I know why? I'm not even sure what you're investing in right now. So
They said the person said they find it hard.
difficult to invest in other options like equity income fund, like equity fund.
That might be, you might need to overcome a bias, a behavioral bias. I think. What's your background like? Have you been exposed to risk before? Do you have someone who's invested in risk, related assets, and have lost money? I think there's an internal question that needs to be answered first before you venture into invest into that. Talk to somebody. Talk to someone like Axel Mansard. We would help you do that. The next thing is just really, I think, two things really quickly. Investing, we have capacity to invest and willingness to invest. Right? Capacity would mean that the threshold for investment, you don't have it yet. If you want to buy, if there's a note that the minimum investment is $100,000, if you have 100K, it means capacity has limited you, right? If you're willing to invest, it means you all have the fund, but you do not want to invest. So it's really a balance between both, because I mean the spirits might be willing but the pockets will be weak, so it's about knowing the balance between both, right? So if you have capacity to invest in it, then questions like why you're not investing in it will come. If you don't have capacity, it means there are other opportunities that you can use in interim, and then when you can invest in that, then you can shoot for it.
Okay. Miracle says you mentioned that MMF yield per annum will likely experience a decline in Q3 and Q4. Just to confirm if I'm right on that.
This is why I say these are questions are very, very important, because they tell you exactly what. So there is no. So what we have done here is to give likely expectations, which is setting you up where you're informed. It doesn't necessarily mean that these things are cast in stone, right? If I ask Yemisi today, what's the chance of you getting punched in the face today? She won't really think there's any chance, right? Because I mean my
Why
my
would I? Why would I?
I mean, what's going on. But if Yemisi enrolls in MMA, right, and she's thrown into the MMA cage, which is kickboxing, and if I ask her, what are your chances of getting punched in the face today? She will ask me, if I don't get punched in the face, then I'm not going to earn my money, right? So what we've done is to pretty much give you all the tools available, which is prepare you to be in that MMA cage, right? But when you're in the MMA cage, what kind of gloves are you having? What kind of stance do you have? Are you well positioned? If a blow comes, can you block? Can you punch? If you can block that, can you throw a blow? How agile are you? How strong is your core strength? But you will be in that cage. So my point is, a possibility of a decline in yields doesn't necessarily mean that they will decline. Some cannot say in December, at least you say you will decline, you not decline. You see, it doesn't mean that. But wouldn't you rather have been expecting
Okay.
possible decline and you were prepared for that, rather than there was no decline, there was no warning, and someone just kept their made decisions, and it turned out that they suffered consequences of that, and it seemed like you didn't tell me this, you're my investment professional and all of that. So that's what we have done. So yes, from the market indications, we are possibly likely to see that. Chances of that happening in Q4, based on the maturity profile I showed, the graph I showed, is a bit higher than chance of that happening in Q3, right? So again, Q3 is a time to be having more of the conversations, right? The market is, it rewards proactive people. So conversations that you're having now, all the funds you are thinking about, it's the time to start paying all the funds into the money market fund and start having those conversations.
Thank you, Lisa. Similarly, Waishola says, if I want to move fund from MMF to buy TT, I think that means T
T
bills
bills.
or CPs, commercial papers, would I lose
Okay.
accrued interest before the quarterly payouts?
Before the quarterly, if you have a fund balance in the money market fund, you get your dividends. You get your dividends. Your dividends are compounded. So all the interest you have earned between the quarter, if you put in 10 million naira into the money market fund on the 1st of January, you would be earning an interest. By the time you get to the 31st of March, or 1st of April, you will get dividends from last quarter. It doesn't really, nobody's taking dividends away. You would earn your full dividends. Even on the 1st of April, you start to pile the funds, the money market funds by CP, you earn all your interest will be there waiting for you in the money market fund, right? So yes, you can have a cake and eat it and have some leftover.
Okay. Bisala has another question. Does Dr. Mansard provide opportunities for TPOs? Yeah,
Yes, we
I can
do.
answer that question.
Yes,
Yeah,
we
we
do.
have opportunities for
Yeah,
TPOs.
yes.
Usually we would send out emails like Odisa has said when those opportunities provide themselves, and people would usually take advantage in that period. So if you already have an MMF fund, you will most likely receive that email from us. I don't know if you have anything to add, Odisa.
Not at all. You've gotten my work for me now. Yeah, me see. You've done. If I don't, you should have been the guest speaker self because no, nothing bad.
Okay.
Nothing bad.
Kayode says, what are the steps to purchasing a commercial paper and how secure is it?
Commercial paper. Okay, commercial papers. The only thing I'll say, people. Okay, what I'll mention on here is illiquidity of commercial papers. Now, some people will ask question in case you want to ask. You hear fixed deposit commercial papers. They are both locked in for a particular period. They are both with a fixed tenor, which is how many days is going to be invested in. They're both for a fixed yield or rate, as you call it. The only technical difference is the illiquidity of it, right? Like for instance, okay. Let's have a real life quick scenario, right? If GT Bank approaches you, whoever asks a question, right, and says, borrow me 10 million naira. I also just run a few transactions, right? But I'll pay you this money back in 90 days, right? Also, Yemisi has a hair business. Yemisi, you are very versatile. No? Yemisi has a hair business, and Yemisi, feels, if I had a studio where I was selling my hair, I will make more money than what I'm, making right now. But the studio, to make a studio is 10 million naira. And Yemisi currently earns, let's say she earns 500,000 a month from what she currently does. And she believes that, if I can make this 10 million naira studio investment in 6 months, I will be earning 2 million naira a month. But the money to start studio, I do not have, right? So Yemishi approaches the same person and says, give me 10 million naira. Remember that GT Bank had approached the same person and said, give me 10 million naira, right? For the same period. Now, the question is, right, who do you think, and you say, you know what, I cannot give money like that, what's my interest on it, right? No problem. Who do you think would have to pay you more to take the money? Obviously, let me see. Because I know GT Bank, if anything happens, I can go to GT Bank and drag them, right? Whatever it is. But let me see, a celebrity to us, let me see. But to the outside people, we don't know see. Hello, Jebe. So my point is there's a limit to what you can do to get back money from see. So most likely see have to pay more. But more importantly, is that GT Bank, even if things go south, they can borrow from other places or they have other things that can give you money and say, you know what, take your money back. But remember that you needs 6 months to set up a studio. So if you give me say you're 10 million naira now, if you ask me for that money in month 3, you say, I've used to buy cement.
Mm-hmm.
Do you get? So Yemisi most likely wouldn't have your money to give you because she has already invested a chunk of it in the period. What am I trying to say? Commercial papers are Yemisi, deposits are GT Bank. Yemisi needs the money because she wants to expand her business. So chances are that every day from the moment you give her the money till the moment is mature, Yemisi needs your money urgently. So if you're investing in commercial paper, please, there is high illiquidity involved. I repeat, there is high illiquidity, so you cannot pre-terminate the commercial paper. You cannot do that, right? So if you're investing in commercial paper, ensure that is money that you have, sidelined and said, for this period, I'm not going to have access to it because it cannot be pre-liquidated, right? So that's it.
Okay, wow. Thank you for that, Odisa. MEC is what? Commercial paper. I love
Commercial
it.
paper.
Okay, Joshua Palumi Akinyola says, please can we get a recording of the session? Yes, if you registered, you will be getting a recording once it is
Let me
uploaded.
see. I need them to dress well. Hey. Oh,
Stop.
my. Okay. You'll get the
Okay,
record.
I think are those all the questions? I thought I saw a question in the chat session. There's still a lot of questions. Oh, okay.
We can just run through them, no analogies.
Wow. Okay. How can I get onboarded with AXA Mansard investment without knowing anyone? www.axamansard.com slash
Yes, and you get a link
investment.
and it takes you to your onboarding site
Or you
immediately.
complete it immediately, or you go on our app, my AXA app. You can complete your
AXA Plus.
transactions from my
Yes.
AXA Plus app. You
Yes.
can complete your transactions from A to Z.
Okay.
Why do we get notices for commercial papers after the opportunity has closed?
Emails.
Okay. This is a very interesting one. After the opportunities have closed, I think that has something to do with the way that sometimes you get an email, maybe the timing that it has dropped, but would usually send on time. But we'll look into that. Thanks for bringing that to our attention.
Okay.
Does AXA Mansard invest in USD? If so, what is the rate? I think Olisa has already talked
Yes, dollar
about
bond funds. Yes, we
dollar
do.
bond fund.
180 days minimum locking period. Yes, $2,000. Yes.
Mhm.
Sure.
3 questions from Charles. Are there entry, exit, or management fees? If yes, break them down. What is the minimum
Fantastic
investment?
question. Okay, so you need to ask that question really because everything we communicate is net of fees. Net of fees. So we do have that, yes, but it's net of fees. So when you see 7%, 7% means take a calculator and punch it. It's net, right? So we don't report net of fees, not negotiation fees. So whatever you have, there are no extra charges to that. And when there are charges, you'll be communicated with. Next question.
Okay. What is the minimum investment amount and the minimum holding period?
Money market, 2,000 naira, dollar bond fund, $2,000, customized investment, 5 million naira. Yes.
Okay.
Euro bonds, I didn't say that Euro bonds, $50,000.
0 points. Okay. Can investors switch between funds easily, e.g., money market to balance fund?
Uh, Money market, not across funds. You can switch from money market funds to customized funds, which is customized investments. You can do that. Yes.
Okay.
In the
Can I
long term.
open money market funds?
What?
Please, can I open two money market funds? It's a question.
Interesting question. At the moment, no, and heavily hinged on regulators, right? In Nigeria right now, there's a lot of emphasis around regulation around that. Things like NIN, BVN would mean that Nigeria is moving to a situation where all your investments are pretty much tied to one number. So they are
One
trying
place.
to de-emphasize the dual function of
Mm.
investments across board. So for now, one money market account. You can have one market account you want to have for your dependents and co. You can have one corporate account, right? But individual account one. Next question.
Okay, so I think we have successfully rushed through all the questions that we had. This has been
Yeah.
such an engaging session. Thank you so much, Olisa. I think you and I will catch up after this. Just for a small closing remark from the head of product management at AXA Mansard Investments, Michael, please go ahead and give your closing remark before we close the session.
All right. Thank you very much, Yemisi, and for making this happen and for driving the wheel on which Olise drove on to then, charge us with the different stages of acceleration and, of course, costing and essentially, for us setting ourselves up. So many thanks, Yemisi, and also Olisa, thanks a lot for such an insightful, knowledge-driven, detailed and simple explanations and concept around how we can actually get a better end to the year 2025. And you've also kind of given us some warnings to the new year 2026 in case we have some people that are already doing well. You've also given us what we need to then be mindful of. I think really nothing really much from my end. The questions have also really shown how engaging the session was and how the attendees were really following on every step of the journey itself, and it shows that this is really a great use of time for the attendees and of course for the business as well. It's part of what we do at AXA. Contributing to human progress, and we can all see from the conversation that A lot of the people here, have been able to make some advancement from the questions. So thank you very much, Olisa. Thank you, Yemisi. And thank you, everyone who took time to also join. Looking forward to seeing you more and then seeing you make smart investment decisions. So over to you, Yemisi.
Okay, thank you, Michael, and thank you, everyone. Shout out to you, Olisa, for this session. Shout out to Victoria also for organizing this along with me. To everyone who is still on the call and everyone who is asking about the video, you will get the link to watch the video sometime next week if you registered and we have your email. Yeah, it's Friday, so thank God it's Friday, and enjoy the rest of your day. Bye, everyone.
Thank you, Lucy. Thank you, brother. Thank you, everyone. All right.